Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself if it's appropriate to you. Okay, so our market closed up 0.86% today, defying the weak futures that we got led into this morning, right? So at this point of time, we're holding a key level of support through around this sort of 67, 60, 68 level. Now we're holding that level, guys. It looks likely we're going to come up for another test of this key resistance up around 69. We did break through briefly, failed, but now it looks like we're potentially, forming a bit of a higher trough here and hoping we're going to shoot through. Only time's going to tell. Look, we've definitely got the environment for further upward movement. If you sort of look at the backdrop at the moment of high commodity prices, so copper's been rallying hard over the last week. You've seen the likes of other metals also follow that. Iron ore's reopened and opened up a bit higher and holding strong. So with that space, and not to mention crude as well, back up near 62 US. With all of that, it's got our energy and materials sector pretty excited. On top of that though, what you got to think about too is the bond yield space, and the 10-year bonds have been, longer term bond yields have been going up. So we got selling in the long term space, but a bit of buying in the short term space, keeping those short term yields very, very low. Now what that does is it really steepens the yield curve. And when that yield curve steepens, it's really good for the bank's profitability. It's also a sign that there's inflation on the horizon, and we're talking longer term, right? Because people are now pricing in perhaps maybe 7-10 years time, interest rates will go up. That's what could be going through investors' minds right now. But there is definitely a race to sell longer term bonds, all right? That money has to flow somewhere, and that's likely to come back in towards equities or maybe the housing market and things like that, because you don't want to be caught holding long-term bonds as those yields are going up, because the value of the bond holding actually goes down. It's selling. Okay, so if a lot of people have got to understand that there's money coming out of long-term bond space. It's got to go somewhere. All right. So then when you start looking at things like stimulus in the US, very accommodative central banks, things are looking positive for equities out there and asset prices in the medium to short term, okay? So there's always a few things on the horizon we've got to worry about, but right this moment with commodities rallying and what's happening in the bond space, that's definitely good signs for value stocks, okay? So there's a bit to talk about in that space today. So firstly, look, the technicals are a little bit bullish again. We're seeing buying back at support, and we could be either going a little bit higher to sideways, because the market has sort of been stuck around these levels for a while, and you never really know exactly when the breakout's going to happen for the next big move. We could see another month or so of sideways here. That's always on the table. Okay, all right. So that's the XJO at the moment. But if we go across the S&P 500. That's also been pulling back. Now, what's been leading this lower over the last few sessions has actually been selling in tech. Because if you go over to the NASDAQ, which is heavily tech-based, you can see that's been selling off quite heavily. All right, so what we're starting to see last night was a bit of a disconnect between the three major indexes. You had a strong selling in the NASDAQ, which is very tech heavy, but then when you start having a look at the Dow Jones and the S&P 500, well, the Dow actually closed in the green, and then the S&P 500 did something in between, because the S&P 500 obviously has the tech stocks in there. Now, what's pushing markets up right now is energy, materials, and banks mainly. Okay, they're the three strongest sectors of the US last night, and they're the three strongest sectors of our market today. So what we're seeing is rotation. We're seeing a rotation out of those very overvalued growth stocks coming back into more value and dividend type stocks. Okay, so there's a lot of value stocks in the Australian market. Would say that the majority of the top 200 stocks would be classified as value, where in the US it's very, very different. Okay, we've got a lot of very overvalued techie type stocks in the US that performed extremely well last year with all the lockdowns. So we're going to recovery phase, aren't we, right? So, we think about the recovery of the economy as we get the vaccines rolled out, as we get stimulus thrown in there, infrastructure spending thrown in there, as people start moving around, what stocks do you think is going to benefit, right? Well, banks are going to benefit as people, that you're going to get more movement in the sort of home loan space, right? For our big four banks, you've got, you know, good backdrop for them with the bond yield steepening as well. They should see good profits come. Then you've got commodities going up because everyone's expecting infrastructure spending, okay, a lot of infrastructure projects to get underway over the next few years, so commodities are going up. Infrastructure stocks, CSR, industrial type stocks, like CSR, are going up, okay. So banks, miners, energy, all that sort of space is performing extremely well. On top of that, today we also saw the travel space come back in. We saw the likes of Sydney Airport, Qantas, Flight Centre, corporate travel, all pop up quite strongly today. So we're definitely, the vaccine news is playing its effect, okay? The recovery story is playing the effect on the market right now. So even though you're not seeing a lot of movement in the actual S&P 500 or the XJO, there is a lot of movement in stocks right now, okay? You know, look at BHP up 3% today. Look at CBA take a nice strong recovery, up almost 2% today. So even though the XJO is not moving a lot, you are getting a lot of movements in certain sectors, right? So it's about the sector picking right now from a trading view, right? Playing the next sort of couple of weeks, the next couple of months. It's all about what sector is the flavor right now, and it's clear right now, and I've already covered all that off. So a little bit more detail around the vaccines. Here locally, we've got deliveries of the Pfizer vaccine coming in at the moment, and then CSL will also be rolling out their vaccine very soon. That's all been approved, so we're waiting for clear dates on the rollout there. What we do understand is it will be a slow rollout between now and October, but nonetheless there's a clear light at the end of the tunnel there. The challenge is going to be getting enough confidence for enough people to take the vaccine. Okay, so there's still a lot of anti-vaxxer attitudes out there. I think the producers of this vaccine and the government really have to prove that it's safe, because it has been a very quick turnaround, so it's got a lot of people worried. So it's going to be an interesting year on that front. It'll be interesting to see how many people take up these vaccines and how quickly we can get back to some form of new normal where we're all moving around and traveling a bit more. But yeah, definitely need to get the travel back on track if we want this economy to boom again. We want to see immigration back on track. We want to see overseas students back here, and we want to see people traveling and tourism to pick back up again. All right. So the vaccine sort of all leads towards that normalization happening in that space. Reporting season is about a week left. Highlights of the reporting season so far: the banks have all responded very, very well from their reports. Although it was CBA that mainly reported this season, the other three did quarterlies and all shot up pretty strongly on the back of that. Not to mention Macquarie, that we also saw a quarterly come out of them as well with a strong movement. So banks, miners reported extremely well. Just to highlight a few, there's about a week's worth of reporting left here, guys. Okay, so you know, once we're through that, we come into a bit of a dividend period where a lot of stocks go ex-dividend, and that tends to be a little bit of a drag on the index, guys, as those dividends come through. So the next big thing I'm really waiting for is more news on stimulus from the US. So Biden's go big stimulus, okay. They're dragging their feet a little bit here, but they've got the time to do so. So I'm not worried yet. I don't think this is going to turn into anything sort of uncertain or negative just yet. I think we've got a few weeks for that, but we definitely in the next few weeks want to get more positive news that stimulus is on its way, and those cash checks are going to be sent out to everybody within, you know, that March period. So that's what we're looking for, guys, okay, to keep that US market higher and keep that run going. All right, we need a bit more fuel on the fire, I believe, to keep this bullish move going. Right, we need that next catalyst. The last thing I'll mention is tonight you're going to hear the Fed chair talk, okay, so there's going to be more of that. I really think that might spur another bullish move as well. They tend to reconfirm the market, give the market some confidence that the accommodative stance of the Fed is not going away, right? The Fed is just trying to give everybody confidence right now, and that's what they're doing on every single announcement and every single speech, is just giving everybody confidence that rates are not going up anytime soon, okay? So I expect expect more of the same tonight, and that usually helps markets spur higher as well. All right, so really not much else to talk about. The things that have changed mainly is that extra bit of a run in that commodity space, guys. All right, that's big. Huge movements over the last week or so, and I still think the actual market is playing a little bit of catch up on that move higher in that space. We're definitely seeing a take off today. That could be just the start of a bit of a run up as we catch up to what's happening in commodities. All right, thanks for listening in. Take care and bye for now.